It's time for another weekly stock market forecast. Let's get into this. This is going to be for week number 7. Week number 7, that's February 13th through the 17th. Let's take a look at the market forecast for that. All right, so year-to-date performance, the QQQ is still leading the way. That's the NASDAQ ETF, up 13%, down from its highs, though, of over 17.5. Russell still in second place, followed by the SPY and the DAI. And the DAI is not far off from dying. It's only up 2.33%. Not much movement from that for the entire year. All the action's been in the NASDAQ and the Russell, and just only a little bit in the SPY. That's the S&P 500 ETF. All right, so let's talk about the Russell 2000 here. Let's zoom in first on the monthly chart. Really not a lot of change since last week. It's a monthly chart, so you're not going to expect much change at all. You know, we're still kind of floating above that support area at the 1600, and we rallied up into that 2000 area right there and has pulled back since then. So it just can't quite seem to get any bullish traction to the upside. Still kind of just hanging around that, call it 1700 to 2000 area. Same concept on the ETF, the IWM. Rallied up to about 200, just a little bit short of that, and has dropped from that level. And so, again, not really any dominant direction, either up or down, just really starting to consolidate and go sideways with a slight upward bias these past few months. And you can see a little better on the weekly chart, still range bound between 1700 and 2100, still stuck in that range between that support and resistance area. Price did rally up into that 2000 resistance and has dropped down since then. So that resistance still intact, still working nicely. So far, so good. Also on the IWM, you can see it rallied up to about that 200 mark and has dropped down since then. So sellers still in control up in that area until proven otherwise. On the daily chart, we can see that resistance area worked out absolutely beautifully at that 2000 mark. Again, psychological number, anything with many zeros in it. There just happens to be a nice psychological resistance or support at that area, and it certainly proved to be true in this case up at that swing high resistance area. And price now has dropped into a bullish location at that 1900 support area. So definitely be looking for about a, several day rally perhaps. And we'll see if the Russell can rally back up to 2000 and challenge that resistance area. Now that's going to be a bit challenging because again, we just saw on the weekly chart, we got quite a bit of resistance or supply up in that 2000 to 2100 range. So it could be pretty tough to really break through that. Although I wouldn't be surprised if it rallied up and challenged it at least. So I definitely think that's possible. And to get a multi-day rally out of this 1900 support area, I don't think is out of the question. So be on the lookout for that. Depending on how the market opens on Monday morning, I definitely think a rally would not be unexpected there. If it does drop down lower and we see more bearish pressure coming in, again, because, we're coming out of that resistance area in the weekly, so it definitely could drop down lower. If it drops down lower, I'd be looking for it to stall out or reverse about that 1800 area. You can see that support or demand located there. Same exact concept on the IWM. Price turned in that resistance area at the 195 to 200 range nicely and has dropped down into that 190 support area. Definitely a bullish location. Like I said, I wouldn't be surprised if we get a nice little rally out of that. If it does drop down lower, I'd be looking about the 180 to 175 range for it to stall out and look for a reversal there. Either way, I'd be looking for the Russell to look for a buy setup early in this coming week here to see if we can get that rally. We'll see how it opens on Monday, and if we start to see some momentum to the upside, that could be a nice little 1, 2, or 3 day rally to take advantage of that, a short-term swing trade. And if not, if it continues down lower, then I'd be looking for about that 180 area for a bullish swing trade. And that's about it for the Russell. Let's now take a look at the NASDAQ. On the monthly chart, we can see the bearish trend and sentiment. Yes, that support area has worked out nicely so far, but we can see that big topping tail on that monthly chart so far anyway. That tells us the sellers are in around that 13,000 area. And you can see the same concept on the QQQ, the NASDAQ ETF there. that support area was holding up, consolidating, and then it started to rally, ran right into some selling pressure about the $300 mark. And you can actually see that a little better on the weekly chart. Again, multiple resistance areas here starting around 12,000 all the way up to about 13.5, 13.6, up in that range. So it's going to be really hard for price to continue to have a strong rally knowing that there's two big resistance or supply areas right there. It's going to be tough to do that. But hey, it's happened before, That's why we stay on guard. We have our plan and we follow the plan. Market can go up, down, or sideways, and we have a plan for all three. On the QQQ, we can see on the weekly chart, same concept. We're in that resistance right now. So as far as the location, it is bearish. Right at 300. Again, nice psychological number there. So on here, I'd definitely be looking for price to continue to the downside. I certainly hope so because I shorted it. And so I hope it goes down, but we don't want to trade on hope, right? Hope's not a strategy. Let's take a look at the daily chart. Price rallied up into that 2,800 resistance area. Beautiful reversal and turnaround. That's where the short was. And again, we had this planned out ahead of time from a week or two ago. It rallied up, execute the plan, and now that it has come down, we're looking for either a target or a buying opportunity around that $12,000 area. We can see you have support and demand down there. Same on the QQQ, it'd be about the 290 area to 280, right in that range right there. If you are short like me, then you can look for profit taking just a little bit above that support area, at least for a first target anyway. And possibly even a multi-day rally. So look for a bullish position if price drops into that support area there. If price rallies higher, that from right now, that's what your stops or your hedges are for there. And so that way you either have a small loss or no loss, or maybe even a small profit if you already have a decent profit cushion. All right, let's turn our attention to the S&P 500. Again, monthly chart, still mildly bearish. We're right up on resistance right there. And not so much really a downtrend anymore. We can see it's really starting to consolidate and go sideways a little bit, or let's just say very mild downtrend. So I put mildly bearish there. Overall, still the bears are in control, but not by a whole lot. On the weekly chart, we can see we're still range bound. Really going between that 3,500 support area up to about the 4,300 resistance area. Now, the thing that is encouraging, we can see there's a higher low here on the chart, so that's encouraging for the bulls, but it just hasn't gone above that 4,300 resistance, and until it does, the bulls just simply do not have full and complete control. So we got to play the market like it is. Okay, so be it. So price rallied up into that resistance area. That's where we look for the shorting opportunities, and we just play the range. Now, you can see the same thing in the SPY. Prices rallied up into that resistance at the 410, call it 420 to 430 area. Again, that would trigger the short or bearish position, and we're just letting profits now run to the downside. If it stalls out to the downside and rallies and heads higher, don't be discouraged. It's actually a really great thing, because what that's telling us, well, number one, we'd be stop out of our bearish position. But number two, that's telling us now, the charts are communicating to us that now the buyers have taken control away from the sellers. The sellers are no longer pushing prices lower at lows and lower highs, but rather the bulls now would have a higher high and a higher low. So now you could step up and be more aggressive in your bullish trading tactics. And so if that happens, great. Then let's rejoice about that and say, woohoo, we're in a bull market now. Let's go for it, okay? But until that happens, I'm staying bearish here. I'm just trading the range just like the market gives us and playing the probabilities, really. On the daily chart, we can see that, yes, I put that in my notes there from last week. That was look for a reversal here. We've gotten the reversal now. That's happened on both the futures and the SPY. Not a really big reversal. I mean, yeah, okay, it's reversing, I guess would be a more appropriate term, not reversed. Because if it fully reversed, I would expect price to drop even lower on the SPY, probably down to at least 400, if not 390. And if it does get down there, great, then we could start looking for some buying opportunities or close your short positions at that point. On the futures, though, yeah, again, it's reversing. Not a real full-blown reversal, though. We just don't have that big downward push, at least not yet. Let's see what happens on Monday, Tuesday, and Wednesday. If it starts to get more negative, we see that downward pressure, then great. Then we know that resistance is really holding up well, especially that weekly resistance. Remember that it goes up to about 4,300 on the weekly chart. So we still have some room to play with there on that resistance. So what I'm getting at is it still could go higher. There is room for it to go higher, in fact. So play it safe. If you're looking for buying opportunities, I'd hold off for it right now. Now's not the time. We don't have the right location. We don't have that really strong bullish atmosphere. Not yet. Okay, we're getting there. We're starting to see some evidence of it. We're just not fully there yet. And the other side of that is, the bears aren't in full control either. And that's why we're really seeing this tug of war battle going on between the buyers and the sellers. So when you have a situation like that, play the probabilities, play the odds, play the odds on this. Wait for price to get into those weekly resistance or support areas and then initiate your trades. If you're playing on the daily charts right there, sure, you can still do it. It's just going to be a shorter term trade. It might only be a 1 to 3 day type of swing trade. Whereas if you're using the weekly areas, you're looking at many days or even several weeks of a swing and possibly even a longer getting into position trading at that point. All right, so that's the S&P 500. Stay tuned. More market updates coming weekly. I will see you back on here next week. Have a great trading week, everyone. God bless and good trading.